specific deductions. In addition to the general deductions, taxpayers may claim a deduction for various expenses under a relevant specific deduction provision. Often, a specific deduction provision is included to encourage taxpayers to invest their money in a particular way. For example, 125% is deduction for research and development for any expense. Generous depreciation rates for new equipment for investment allowances as well. A taxpayer cannot claim a tax deduction for the one item of expenditure twice, even though expenditure may be deductible under more than one section. The Commissioner will determine under which section the deduction will be allowed, section 8.10. These deductions are for 8 main areas. The first is tax-related expenses, 25(5), in managing your tax affairs. For example, registered tax agent fees. Then repairs under 25(10), which are not improvements, which is capital, but restores or makes good an object. There are quite a few cases looking at the difference between a repair or an improvement, such as the case of Western Suburbs Cinemas, where the ceiling fell in. In this case, it was repaired with newer, better material, and the High Court agreed with the Commissioner of Taxation back in 1952 that the new material constituted an improvement, and the purported repair changed the character of the property and did not merely restore it to its previous condition, and the deduction was denied. The deduction must be for actual repairs paid and not notional. So, if there's a quote for a repair and the taxpayer then decides to improve, they cannot claim the quoted repair costs. Bad debts can be claimed if a taxpayer is using accruals basis for accounting. The cost is incurred when billed, not when actually paid, as with cash. The debt must be pursued and then properly written off before it can be claimed. A related specific deduction is where taxpayer is in the money lending business, allowing a deduction for bad debt even where an amount has not previously been included in the taxpayer's assessable income in relation to that debt. There can be a deduction for payments for trade, business or professional associations under 25(5)(5), but this only goes to $42, usually only used where a taxpayer is no longer practicing their trade or profession and therefore cannot claim their full amount under 8.1 as a general deduction. A deduction is allowed under 25(100) for travel between two workplaces, where the taxpayer is engaged in income-producing activities at each place. However, the expenses are not deductible under 25(100), where one of the workplaces is also their taxpayer's residence. There are exceptions, such as taxpayers carrying around heavy equipment and they must take it home. Gifts can be deductible under Division 30 of the 97 Act if made to a registered deductible gift recipient, and these include charities, public hospitals and research organisation. These must be a true gift, so where the taxpayer gets no reward or anything. In the case of McPhail, we saw a cash given for a school building project, but the child of the taxpayer's fees were then reduced, so this was not considered to be deductible. Further, prior year losses can be claimed where the taxpayer's deductions exceed their assessable income as well.